Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 14th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. Right now, 4-day narrow range developing at the moment, just ahead of pre-market economic data points. We have PPI coming out, initial jobless claims, retail sales, and a bunch of other economic data points 1 hour prior to the RTH Open, which could provide some volatility. Now, yesterday, that was not the case. Yesterday, we got one quick pop down or drop down, pop back up above the prior 2-day lows. That was on the initial CPI data release, and then price stayed mostly range bound the rest of the day. And now, as we head into Thursday's trading here, 4-day narrow ranges still intact. As we head into Fed week next week, so if we fail to break out here today or even tomorrow, it could be a range-bound development here heading into next Wednesday's FOMC statement and rate decision. Now, the thing we're going to want to watch here for the ES is 45.50 in that zone right there. 45.50 is this level right here. You can see that's the level where a failure occurred. And then from there, bears have defended pullbacks into that zone. So if we get a pop higher on initial jobless claims, PPI, retail sales, and things, and then that pop fails, we could be looking at a failed new high that could turn us back into the trading range below. Very similar to any of these here where you have your trading range, you pop early, and then you fail back into the range. That could be ahead. Now, pushing through 45.50 and finding acceptance could be a transitional move that can take us up to the next highest level, but we got to really see that be proved out. For right now, keeping an eye on this zone up here for signs of a potential reaction that could bring us back into the range and keep this a 4-day trading range heading into the Friday's trading. Now, a breakout again could be significant depending on how the news is taken, as this range right here forecasts at least 100 to 120 points of range up ahead once expansion does occur. Now, looking at the NQ, very similar price action here for the NQ, narrow range of price action. Yesterday's pre-market CPI came out and you had a quick drop followed by a reversal and range bound action the rest of the day here. We now have a 4-day narrow range that's developed here as well, or a developing 4-day narrow range. Keep in mind again, this market hasn't really been able to get through recent highs here. Every time it's tried to get through the 15,600, 15,660 or so, it's been bat back down. So again, watching this edge, if it can push through, opens up some upside here to recent highs. But again, this market here hasn't really shown an appetite to really move much of anywhere here to begin the month. After last month's drop and pop here, this is the previous month's close, and we've pretty much just gone sideways around that level, building some energy here for the next move. All right, let's take a look here at crude oil. Crude right now up about 1.5% again, as this market continues to show just tremendous strength. This is what we talked about before. Very, very bullish advance, very strong 2-day breakout through the 84s, which transitioned us higher. We're now through the 89s and approaching 90, which is 6 points beyond the breakout point here with 4 points to go up above. The 94 level would be the next level above, and so again, any pullback could still be a buying opportunity until proven otherwise. This 4 or 5-day narrow range that was broken to the upside suggests a 6-point breakout move from the low here of 87.22 plus 6 puts you at 93.22 at the very least. So this market still continues to push higher. Given the very, very bullish trend here, failed new lows could be the way to go, but we haven't really seen a whole lot here. This was one little failed new low. That was one that began the whole thing here on the upside. The next failed new low could be a buying opportunity for a continuation toward 93.94. All right, let's take a look here at gold. Gold right now down about nearly 0.2%, but sitting right on top of the 200-day moving average. 2 days sitting right there, a downtrending price action clearly in play. This market has failed to get previous lows before, so again, will we get the previous month's low up ahead? If so, could be an opportunity to snap it back toward where it came from. Again, if we are to see a full-on breakdown, you would require a push through that 1900 level to really open up 1800 below. As of right now, no real indication that that would be the case. We're still just compressing here. At some point, we will get that big move. Maybe it's next week on FOMC, the FOMC announcement. So again, still trending down. Maybe the directional conviction or a true breakout occurs once we get some resolution out of this range, perhaps on Fed Day next week. All right, lastly, looking at the YM about 1/4% higher at the moment. This market right now trading just above 35K, but sitting right at the center of a narrow developing 4-day range. On a 3-day range basis, you can see it's compressed. 4-day range even more, but right now, again, just ahead of economic data points coming out prior to the RTH Open. This could provide perhaps a breakout opportunity. Now, to be dead center of the range here, which way will we go? Again, 35.2 here, very important near-term key range high. If we come up into that zone or beyond it, it could be a fade right back into the range until proven otherwise. Likewise, if this thing were to drop down a bit, it could be a fade back up into the range. So we could be fading the extremes here near term unless we see a full-on breakdown or breakout. A transitional move through 35.2 would take you into 35.4 or so. That type of transitional move would open up a continuation toward the highs. But shy of that, we could be fading back within the range as this thing continues to trade sideways throughout the week. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.